What's going on, y'all? Listen, are you ready to make money and don't have to report it on your taxes? We're going to dive into the Augusta rule, right? Here we go. What's going on, y'all? It's another episode of Minding Your Biz, tax edition. I'm one of your co-hosts, Dr. Blackwell. And we got...
All right. Hey, it's your girl, Miss Fat Financial, and we're in this thing. Tax tips. What we talking about?
Right, tax edition. So we talking about the Augusta rule.
Augusta rule.
It's one of the
tax strategies.
It is a good tax strategy. Mm-hmm. I feel like it's the only thing other than income that you can make that's non-reportable, like insurance, death, or disability or whatever. But the Augusta rule basically says that IRS says that you can rent out your home for up to 14 days, so no more than 15 days, and be able to make income from it, and you don't have to report it on your taxes. So it's like free income to you. And so if you are a resident, if you're just a citizen with no business, this is good for you because this is a way that you can make extra money and don't have to report it. Mm-hmm. If you are a business owner, it's really great for you because you could rent out a place for your business expense, receive personal income, and then don't have to report it. But it's a business expense to the business if we're doing let's say we're doing a retreat, what's some people call employee getaway, team building, team bonding, or something like that, or an event.
Yeah.
Let's say your house is just a nice house, and you're like, hey, I want to use my space for whatever. I can charge the business for just like Airbnb or depending on the daily rate, right?
Yeah.
And so we can get 100, 200, 300, depending on what's going on. Mm-hmm. The rate of inflation, right? So this rule came about because of, it's called the Augusta rule because of the masters.
Yeah.
So like in the 1970s, the Georgia residents was like, hey, we want to be able to rent out our space and not have to report the income. So the residents of that area fought for this rule to be in play, and it became in play. It's actually IRS code 280 Alpha Golf. Specifically.
Hence golf, right? The masters, right?
Right. So
they would rent out their home, beach homes, vacation homes.
Or their own home.
Right. But, we're talking about Augusta, Georgia, for those of you who don't know. The Masters, the professional golf tournament, for those of you who don't know what that is. But it brings a lot of money into the city, into Augusta. And so people need lodging, and so they're like, okay, well, you can rent out my home for a week. The Masters was only about a week or 2 weeks long.
Mm-hmm. It's about a week.
And then you rent your home, and now you receive a good additional income, and then you don't have to report it.
Well, actually, I think it is about
2
weeks because they go in there beforehand, like prep, practice, play, whatever, and then the next week is like the actual game.
And then it's events, tons of parties or networking things that
corporate
people do.
structures to go out there and do kind of stuff.
Yeah.
So the good old boys.
That's right. So if you are into investing, Augusta may be a place for you.
Yeah.
And even, not even the Augusta rule, but just in general, if you want to
Chris
buy
was just
some
talking about it. He said he got a house out there. And so like most people go out of town during the Masters, and they like make enough money to like pay their mortgage or whatever for the whole year almost.
I mean, you got so many different corporate sponsors like Nike. I mean, there's everybody. Places. And like, oh yeah, we'll rent out for our executives or for this event or for a college or anything. So it's a great opportunity to make passive income that's tax free.
Like soon as the Masters is over, they already looking at next year's Masters.
No, for sure.
So it's a good little tax play, right? So like I said, I already went through it, right? So if you're a resident or just a regular citizen, you can use the rule to rent out your personal home. Don't have to have a business, right? And that's the reason why they push for it. They was like, hey, I want to be able to receive income without technically being like a renter or landlord or having to fall under a renter rule. So if you just got a house or you want to put a house out there, you can do that. You can do it that way. If you are a business owner and you do have a house that you own, that you like, that's nice, beach type house, whatever that looks like, where it's big enough to host retreats, masterminds, getaways, workshops, whatever that looks like. You can rent out your own home, physically pay. Mm-hmm. Let's not forget that rule, right?
Right. I mean, it has to be an actual transaction. Right. You got to do the thing you're trying to do, right? Or it's not going to work, right? So it's for those of you who are like,
you can see the money go from here to here.
It's an actual thing.
And do the actual thing. So the business gets an expense. Like, hey, we spent 2 weeks out at whatever. What's the place? Fort Lauderdale. We spent 2 weeks out in Fort Lauderdale, a week on company retreat.
For those of you who are business owners and who generate money, it's a way to offset the income, to offset taxes. It's a tax strategy to offset and lower your tax debt. It's not something that's going to help you get a refund or that's like, oh my God, can I use Augusta rule to get a refund? So some of you don't really understand how taxation works, right? There's things that will lower your taxable income, right? Or non-refundable things, or tax strategies to pay less taxes. Yes. That's where some of these strategies or credits are beneficial. Mm-hmm. And then there's others that actually give you a refund, which is typically income-based, right? And so just know that the IRS typically is not going to give you a refund if you are a higher earner, right? That doesn't make sense. Just think about that. The IRS is a government. They will give you typically a refund if you're lower income. So these are tax strategies to help you lower your tax debt, to help you offset money that you're making. That's a strategy, and you have to be active in the thing. So if you have a house, if you have a home that you can rent out, even your own house could be really decked out, and you're like, hey, I think I'm going to rent my house out, or I work out of my home, and I think I'm going to do an employee something. The issue is that you don't have to report the income, right? Personally, but you can still use the expenses to lower your tax debt. Okay, so
and you might be thinking like, why would I do it? But take a page out of corporate's book. So,
well, they play the game. They about lowering their taxes. They are not giving the IRS a penny, a dime more than what has to be necessary.
And they do incentive things to like. I was at Northwestern. I seen it a lot. Like, so, leadership would do retreats. Like, hey, we're going to go on a leadership retreat. We're going to go on a company retreat, employee retreat, right? And so the leadership would get together, kind of plan out the year. Sometimes they would do it quarterly, right? So it's up to no more than 15 days throughout the year. So you could break that up. It could be 3-3-3. It could be a week somewhere here, a week somewhere there, right? But these are things that you get to do to plan, right? So I like to bring up tax strategies for sure that we can help lower our tax debt. But the biggest reason why I like to do it is because it makes you plan as a business owner versus just trying to reduce the taxes, because now there's some work going to this.
Sure.
If I'm going to be here for a week, the leadership team needs to come together so we can plan out our year. Or we need to have a retreat to make people relax, right? So things like that, right? I liked, I was just talking about Earn Your Leisure did the interview with Barbara Cochran. And so one of the things that she said that stood out to me, I was like, I'm going to really start to do this year, is she's like, I just like to put people in fun environments. She was like, when they are actually having fun, people are like themselves and they are more creative. And I started thinking about that, like, man, all the places that we went and just be a big kid, you just come back rejuvenated. You got new ideas. It's just like plentiful. So she would do kind of random stuff like pajama day at work or cross-dressing parties or all kind of stuff to just make people have fun.
You have to find a way to enjoy the journey from the starting block to the finish line.
For sure.
No matter how long that race is, you still got to live life.
And keep people engaged.
Absolutely.
At a certain
sometimes
point.
People feel like, I can't celebrate till I get to the finish line. Well, what if it takes you 3 years, 4 years? Yeah. What if it takes you 10 years?
Right.
You're just not going to live? You got to enjoy the journey. You got to enjoy the journey. Find a way to enjoy the journey.
Yeah.
Yeah.
So that's it, y'all. I mean, Augusta rule, use it, right? Talk with your tax professional about it. See how you can implement it. Plan ahead, right? Tax strategies is about planning ahead. You can't do this stuff on a whim or a gust, right? We can't come back this year and say, last year you took a trip to Augusta and we could do up to
Augusta
the 14th.
Rule, right?
No, we can't do that, right? So you looking at it this year, we can say, hey, by August you could take a trip to wherever you want to go, LA, whatever that looks like, or your own home if you own it, whatever, right? And then do it that way, right? So make sure that you talk with your tax professional to plan ahead and use the Augusta rule, right? And let us know what you think.
Yeah.
We'll be back with another tax tip, y'all. Don't forget to keep minding your biz.
Like, comment, subscribe.
Hit that bell. Hit that bell.